I need to come closer.
I think we are live. Okay. Hello. Let me finish doing this. Hello. If you're on the live stream, say hi to us and just setting something up so that we are good.
Did you cut off part of my face?
No. Okay. Hello. We are home with the son, the prince of the house, and so you may hear him in the background, and we apologize. Okay. All right. So hello, and you are welcome to our live broadcast. If you're catching this on the replay, you can put in the comments #replay viewer. This is an impromptu live stream, really. I wasn't planning on going live, but I was like, we are indoors, we're quarantined, we can't go anywhere. So let us do this video. This is a video that a few people had requested some months back to talk about taxes and freelancers, So my husband here, this is Fred Nontra, that's my husband. We've been married this year, we'll be married for 9 years. And I just asked him if he would come on here and do a taxes and business Q&A sort of thing with me. So he'll probably get started talking about, so if you have questions about taxes and freelancing, right? So taxes, what you need to do to organize your taxes as a freelancer, and also how you can set up your taxes so that you get the most benefits. All right, this is the place for you to be. Now, of course, we don't want to cheat the government. We want to pay the government all the money that they have to be paid. However, there are definitely certain advantages. Are they loopholes? They're advantages, right? Tax advantages that you can take advantage of as a freelancer and as a small business owner. And so that's what we really want to talk about today. So if you're live on here, you're welcome again. You have to excuse us. We're in quarantine. That means our son is with us. We're trying to keep him in the background, but he may pop up. Anyway, so if you have questions, you can drop them in the comments now. And if you're new here, my name is G Nontra. On this channel, we talk mostly about making a living with your writing. That's what I do. I love to do that. But today it's a little different. We're talking about taxes and blogging or freelancing and working for yourself. So what do you want to talk about first?
Hi. My name is Fred Nontra. I've been doing, like Gertrude said, I've been doing this for 10 years. And, I've seen all kinds of things happen through those 10 years. But there's 4 things I want to talk about as freelancers that I want you to do. I want you to make sure you do. First of all, get incorporated. What does that mean? If you're a sole proprietor.
What does a sole proprietor mean?
Okay, it means you're.
We don't we're smart.
Down, right?
No. We're smart enough to understand, but there are certain terms that we definitely don't know about.
Okay.
So what does a sole proprietor mean?
It means you're in business by yourself. You can just wake up one day and then get set up your business with the government as you're in business by yourself, and then that's a sole proprietor.
Okay.
Now, most of us do it all business owners. Now you can be a sole proprietor, but then that sets you up for dangers down the line. Now, if you're a sole proprietor, if you're in business by yourself, and of course you can still be in business by yourself, but you have to be incorporated. What that means is you become an LLC, a limited liability company. Now, the difference between that and a sole proprietor, you can be sued and they can come after your personal assets. You can go after your bank accounts, and your personal assets. But an LLC, you're shielded with the LLC, okay? Your limited liability company, you're shielded, so they cannot come after you. They have to go after the LLC.
So let me make sure I understand what you're saying. So you're saying that you can start a business on your own. So for instance, like a few years ago, I started my blog, right? I started freelancing, and that's considered a sole proprietor. You haven't set up any kind of business entity, right?
Yeah, you have to
but then in order to protect your assets, you would need all your personal assets, right? So that would be like your home, your car, your bank account, you have to set up an LLC, which is a business entity.
That's right. It's a business entity.
And when you set up a business entity, the protection there is that if anybody ever sues you, God forbid, right, then the people will be suing the LLC and not you.
Exactly.
Okay. Gotcha.
Okay. Yeah, so
how do we do that? How do we go and set up an LLC?
Now, if you want an LLC, that's going to take me right into my second. Sorry about that. That's son. He has a lot of energy since we were involved in quarantine. Before he would go to school and burn all the energy, but now, we're stuck at home with him. So, to set up an LLC, I'll advise that you have a tax person. Get advice from a tax person from. Does the LLC own things like equipment or things used to run the business? Yes, you can buy get a separate account for your LLC, and whatever you buy for that is owned by the LLC. Whatever equipment you have, yes, you can buy it under the name of the LLC and strictly for the LLC. You're right, and even things like your living room furniture, LLC. You can, and that's going to take me right into one of the points is, your deductions. You can deduct all that on your LLC. So Carla, I don't know whether I answered your question. Okay, I'm going to move on.
Yeah, it comes up a little slowly sometimes.
It comes up a little slowly, okay?
Yeah.
So whatever you buy, you have an account to use, or you can use your personal account, but I'll suggest that you have a separate account, business account, for your LLC. I know they charge you fees every month. Most banks, if you don't carry a balance of $1,000 or $1,500 daily, they're going to charge you, $12, $15 and all that. Yes, that's what I was going to ask as well, the deductions. I'm going to get to that. I'll get to that point. So that's why I say get a tax person, a CPA, an accountant, a bookkeeper to advise you on how to set up an LLC. You can also contact me through contact G over here. She's going to give you my information, and then she'll, I can help you do that. Okay. Again, I'm licensed by the federal government and the state of California, so I can definitely help you with that. So get a tax guy. So what are the tax advantages? Now to Carla's question. Carla is very interested. To your questions, yes, deduction. You can deduct all that stuff. Now you can deduct things like even. Okay, let's start with the space you use. Say you work from home.
I guess so. Let me ask this question. I think this will be my question. That way it makes it easier. So in your experience, right, what are the top, let's say, 5 to 10 deductions a freelancer or a blogger can take for their business? So 5 to 10 different deductions. Yeah.
Okay. So your desktop, you buy a computer, that is deductible. If you work from home, the space that you have, now I see this with freelancers, the space at home. If you, say you use about a third of the space at home as your office space, now that is deductible. They even have a portion where we can deduct that space. The government gives you the leeway to deduct that space, and it's deducted from how much it's deducted from your liability or how much tax you have to be paid. You have to pay. With that, if you buy desktops, you buy laptops, anything, food and entertainment. Now, if you had to eat, or maybe you're going out to meet a business client, a business person, or a partner, or whatever, if you had to buy food, now that is deductible too. And it's allowable as a business owner or as an LLC. Mm-hmm. Okay, you can deduct all that stuff. You can deduct things even like your phone. Now, if you use your phone mostly for business, like 50%, you can deduct 50% of the bill. So you pay $100 for your phone bill, 50, and you estimate that you use about 50% for your business. You can deduct 50% of that. So $50 times 12, 12 months. So $600 will be deductible.
Mm.
Okay, does that answer your question, caller?
And then, so things
And
like, how
food
about
and travel, if you have to travel for
travel.
business. So like my wife here travels for conferences and all that. Her ticket is deductible. The money she paid to go to the conference is deductible. Whatever she ate while she was there is deductible. If she had to use an Uber, Lyft, a cab, all those things are deductible. Okay.
How about when you buy like online courses and such?
Those are also deductible. Now there's a section. I have a template for that on a spreadsheet where I itemize all those things. Now that is also deductible. What was it? What was that?
Online, like anything.
Any course. So that would go under business development or professional courses. Okay, you can deduct all that. It's allowable under the IRS tax code.
Right.
All right.
Right. So, okay. So let me recap what you mentioned. So welcome to those coming in. You're welcome to our impromptu live stream. Yes, thank you so much for coming. Fred is reading your question, Carla. We are just doing this live stream to just answer all your questions that you have about small business, taxes, freelancer taxes, and all that. And we already answered the question about, he talked about the difference between a sole proprietor and an LLC. He talked about the fact that you can make certain deductions. So things like the space you use for work, your computer, anything that you buy for work. If you meet people for clients, like potential clients, and you buy food, you can take that out. You can also deduct your phone, your utilities, so electricity that you use in your home, you can take some of that out. And I think that's it's really helpful. So Carla has a question.
So yes, but for example, if you deduct a portion of your, say, your mortgage, you could deduct your mortgage. Say you use a third, so you pay, maybe your mortgage is $1,800. $600 if you use a third. This is just an example. You could use more space, you could use less space. $600 of that money is deductible. But guess what? It's not part of the LLC. Okay, the LLC is separate. What they'll go after is whatever money is in the LLC. That's why you should also deduct. Another thing that's deductible is your salary. You should pay yourself from the profits that you make in the LLC. So you pay yourself a salary out of the profits. It's also tax. It's also tax deductible.
So
you can't get. They can't come after your personal. They not come and. They can't come and sue you for using the mortgage is under Carla K's name. It's not under K and Associates LLC. That's just an example.
Okay. So I didn't know that. Okay. So to understand what you're saying, Fred, is that if you're running your business from home, even though you could take a deduction.
Hi, Crystal.
Hi, Crystal. Even though you could take your deduction from your home, if people did come after you, God forbid, they couldn't come after your house, right?
No.
Okay.
Oh, Carla, okay, that makes sense.
Okay.
Thanks for your question.
Yeah, that's a really good question, because I didn't know the answer to that question. So that's really good to know.
So I didn't go through, or should I go through while you say your question?
Yeah, so if you have any questions, taxes, so you can talk about your next point.
So I'm just here. So I already went through get incorporated, get a CPA, get a bookkeeper, and then I talk tax advantage with things you can deduct from your as a business owner: rent, mortgage, food and entertainment, utilities. So, okay, let me explain the third. I like to use a third because most people use a third of the space in their home. So if you deduct a third of the space in your home, you deduct a third of your mortgage. You also deduct a third of the utility bill. So if you maybe pay $100 a month in utilities, $30 can be dedicated to the you can deduct $30 from your taxes. Okay, it's tax deductible. All right, and now also I'm going to talk about estimated tax payments. Now you have to, if you make a certain amount. Now if you're single, then you're at risk of paying the government back, because you don't pay as much. I don't mean to come closer. Yeah. Okay. Excuse us. All right. The singles get taxed more by the federal government. Okay. So now, if you make $600 or more, you're supposed to, as a freelancer, you're supposed to file a tax return, and just as low as $600. Anything $600 or more, you have to file a tax return. Now, if you make, if you're a single person and you make 5,000, 10,000 or more, I'll suggest, and you don't have enough deductions, I'll suggest that you make estimated tax payments, because what's going to happen if you don't do that, and the government's going to fine you, they're going to assess you a fee, and underpayment penalty fee. Okay. All right. Any more questions? Whilst we wait.
All right, so I have a question about estimated taxes. So like you said, right, if you make like $10,000, of course, in a year, maybe that's somebody's side hustle, and they made $10,000, right? So how much exactly is estimated that you need to pay to the government? Is there a percentage?
Okay, it depends. You can do that. We can do that. Like, again, if you talk to your tax person, they can figure that out for you based on your previous year and then what you project you're gonna make. Okay, yeah, you can pay that at the end of the year, but I'll suggest that you do quarterly payments. So you pay one. It starts the first quarter in March, June, September, and January. You see, I mean, you can make one a year if you feel like you're not gonna pay back. Whatever happens, if you overpay the government, you always get a refund. Okay, if you pay too much in estimated taxes, you always get a refund. Yes, you can do it at the end of the year, but I suggest that you do at least one or two during the year, so you don't have to wait to the end of the year. It becomes a bigger hit, and especially if you have to pay the government back, and you have to pay so much back, it's going to hurt you. So I'll suggest that make estimated payments through the year: March, June, September, and January.
And then do you talk about a percentage? You should.
Oh, okay. So for self-employed, it pays 15%. 15 to 16. So slightly over 15% of whatever you make. But then, like, again, if you have kids and all that, that amount goes down. That's why we have to put the numbers in. I cannot just figure it out off my head. You have to put the numbers in. If you have one kid, all that can be factored in with the tax credits that you get through, claiming a kid or a dependent.
Okay, but then you would say, just as a baseline, maybe put away 15% as your taxes. I've heard people say they put away as much as 20 or 30%.
Because maybe they make more money. They make over 100,000, or and all that.
Oh, okay. Yeah, okay. So if you make more than 100K a year, then you're putting away that much.
Yeah, they do that just to be on the safer side.
Yeah. So then but then, like he said, if you do overpay, you will get a refund.
Yeah.
So yeah,
after when you do
I know taxes are always hard. So my other question,
Carla, did I answer your question? I like Carla. She's very engaging.
she's working super hard, Carla. Yeah, I know, because she asked really insightful questions on some of my other YouTube videos. So that's pretty cool. Do you have anything else you wanna?
Yeah, share? So you could, like I said, if you wanna, you can always contact me. I can always help you set up your, get you incorporated, help you to estimate the tax payments. Now, the difference. Okay, so I'm going to give an example here. Okay, yes, and sorry if this is obvious, but you file taxes for the individual side and the business side both, right? Yes. Now, Carla, do you have a single member LLC, or do you have a multiple member LLC, multi LLC? So now we have, if it's multi LLC, it's a partnership. Okay, and that has to be done separate. We're gonna file that separate. It's a form called 1065. Okay, but if it's a single member LLC, you're treated as a sole proprietor. You still have the tax advantage, but you're gonna be treated as a sole proprietor, and you still file it under your individual taxes. I still work corporate is a thing. Oh, you still work corporate? Okay. Is that like you have? This is a side of also.
Yeah, it would be a side hustle.
Okay, that's fine. Yeah. once you incorporate your business, you it's under, there's a form called what we call a Schedule C. Yes, it will be said. There's a form on your individual taxes called a Schedule C. That's how we file it, under your individual taxes. Now, if it was a S corp, then it's separate. It's a different form altogether, a different tax form altogether. Or if it's a multi-member LLC, then that's also a different form. But if you just have an individual LLC, a single member LLC, it goes under your individual taxes. All right. While I'm waiting for your question, now there are two examples. Person A makes 100,000 as with a W-2 income. Person B makes 100,000 as a business owner. Now, someone say, "Oh, person A, they took out the taxes. I'd rather have a W-2 income." No, you have more advantages, even if the person worked from home. Now, under the current administration, they made it such that if you work from home and you're not a business owner, you get a W-2. You're a W-2 person. You fill out a W-4 form and still work remotely. You can't deduct anything. You can't deduct your phone. You can't deduct your laptops you buy, the desktops you buy, anything. You can't deduct any of that stuff. You can only deduct it if you're a business owner. If you are incorporated and you have a business, you can only deduct. You can only deduct your expenses.
That's if you're a W-2. That's if you work a 9 to 5, like a regular.
Yeah, if you work a regular 9 to 5, and even if you work from home and you use the space at home and all that remotely, you can't deduct all that stuff because you're W-2 income. The current administration changed that in 2018. From 2018 onwards, you can't deduct anything unless you're a military person. Now, the military, you can deduct, work from home expenses. Although they get a W-2, they can still deduct it.
Wow. I did not know about the W-2 one, but
yeah, at first you could deduct it on Schedule A. You could itemize it under your itemized deduction, like where we have charity deductions, your mortgage payment, and all that. You can also deduct your expenses through the Schedule A, but now you can't do that.
Right.
You can only deduct it through Schedule C, or if you have a multi-member LLC or C corp, S corp, it will have to be your only thing. Good to know.
Yeah. Well, I think what you're trying to say is that if you are working both your 9 to 5 and your side hustle from home, right? The only thing you can deduct is the side hustle. High side hustle stuff. You can't deduct the W-2 or the just the corporate work stuff.
Okay, got it, Carla.
So I think that's the I think that was the question.
The question,
right?
yeah.
Like you can deduct it if it's a business entity, which is why the LLC is important. But you can't do it if so then when you are a sole proprietor, right? And you haven't set up an LLC yet, can you still take deductions?
Oh, yeah. Okay, I didn't make that clear. Now, you can still take deductions, but you're just setting yourself up for, there are no tax advantages there are not many tax advantages like you have with an LLC. Okay, the expenses are, capped at a certain point. All right.
Oh, okay. But
I'll say it doesn't cost anything. Of course, your costs for the consultation. Oh, the 95 isn't from home, so I could still do the business deductions. No. Even if you have both, like Gertrude said, if you have both, Carla, if you work from home for both the 9 to 5 and the side hustle, the portion that is deductible will be the side hustle, not the 95.
And but you answered her question because she's saying that it is not from home. The 9 to 5 is not from home, so she can't deduct it anyway. But she could still do the business deductions for the side hustle.
That's right. That's right. Yeah.
Yeah. So that's you could. I've been doing it for 5 years, and I side hustled for a really long time. Yeah. So so for sure you can take that out.
So definitely,
But
keep tabs on your expenses. Now, one of my pet peeves, one thing that drives me crazy is my people who don't
is me.
they don't keep track of the expenses, and then at the end of the year, they want you to figure out the expenses for them. No, I mean, I'm going to charge you extra to just try to go through your account, and I'm going to charge you the accounting fee and all that. That drives really, congrats on the 5 years.
Thank you, Carla. So something. Now that you brought that up, right? Keeping track of your expenses. This is why I think setting up your business bank account is so important, because you can make all your business purchases through that account versus your personal account. Now, I've made this mistake before, and trust me, I think the first year or first 2 years, I was mixing it all up and I got confused. Please don't be me. Okay, I really think it's important. He shakes his head. I really think it's important for you to have separate accounts, one for business, one for personal, and then pay yourself, so that you are not spending the money in your business account as a personal account. So when it gets to time for you to actually pay yourself, let's say you choose to pay yourself every single Friday, then you just withdraw money from the business account on a Friday. And then that way we keep track of expenses. And so that's what I've done personally for myself. And I have it linked to an accounting software called Wave Apps. So if you go to waveapps.com, is it waveapps.com?
Yeah, waveapps.
No. I think it's Wave
Apps. Just Google Wave Apps.
Waveapps.com. Yes, waveapps.com. So what it does, it connects it to the bank account. So what it does is that every time I use my business card to make a purchase, it registers in Wave. Every time I pay myself, it registers in Wave. Yeah, every time, for sure, Crystal. Yeah, Crystal said, yes, it really is a mess, right? It really is a mess. So what I'll do is I'll make those, if I need to buy a course or pay for a trip for a conference or anything, I will take it from the business account. So when it comes to January and he's sitting down, because I don't do the numbers, he does, and he is sitting down to figure out how much I made in my business and how much I spent, all he needs to do is go into Wave and he can import that as an Excel spreadsheet, right? And he can just put that, it's very easy for him. So ever since I started doing that, I get less text messages like, what is this for? Because
especially when she's out working.
Especially when I'm out, I'm on a conference or something, and he's like, what did you spend this for? Like, it says you spent this here. And I'm like, that's because I was at a conference. So at least I know that everything that comes into Wave, that's business related. It also records when people pay my invoices. So I send my clients invoices. Whenever people pay that, it's all imported into Wave. And it just makes it super easy to track. And this is also important if you, some affiliate programs. Because I'm also a content creator, I get paid not just as a freelancer, but I also get paid affiliate income, right? So affiliate income is any income you make from recommending things to people. So for instance, if I recommended this highlighter and I put an Amazon link to this highlighter in my description and you clicked on it and you went and bought the highlighter or anything, I would get a commission. Ultimately, when it gets a certain threshold, Amazon pays me that affiliate income. Well, it was important for me to also keep track of my affiliate income, but some affiliate programs don't pay to business accounts. They'll only pay to a personal account. So in that case, when they pay me affiliate, I get money from affiliate income. And also I did a video on, if you watch that video I did on all my income streams from 2019, you should check out that video, really good. I talk about different income streams I made. So some of them don't go straight into my Wave account. So what I do is I then sit down at least once a month. I try to do this once a month. Sometimes I skip a month, but I try to do this once a month. And then I import all the affiliate payments I've received any ebook royalties I received, any such thing that came into my personal account, I record that data into my Wave Apps account. That way, again, at the end of the year, when he sits down to figure out the money, I'm not like all the business money has been reported, and I'm not trying to separate things out like spaghetti, like Crystal said. I'm not trying to. It's really, really easy. So highly recommend Wave Apps. There are other tools out there like FreshBooks and such.
You can also use QuickBooks. Yeah, that's a little more expensive. Some professionals out there. You can use QuickBooks too.
Mm-hmm.
Just, itemize your deductions.
Right. So if you have access to that, I think some people have access to QuickBooks and FreshBooks. That's fine too. But I use Wave Apps, and it's just been a real blessing to be able to use it.
I love those clients of mine. I'll readily give them a discount because they make my life so much easier.
Yeah.
Because they have one of my clients. He has everything in QuickBooks. All he has to do is print out his balance sheet and print out his income and expenditure reports, print it out, send it to me. I just look on it. My life is so simple.
Yeah, really.
And
really.
I'm done in a few minutes, less than an hour. I'm done.
Yeah. And if you maybe you're kind of like, oh, I don't want to go to my bank and open a business account because of fees.
It's deductible. All the fees are
deductible. Okay. Plus, if you use a tool, I use PayPal quite a bit, especially for invoicing my clients. If you use PayPal can sort of kind of act like your business account. So you can do that too. PayPal also does charge fees, but again, the fees are deductible. So whether you choose to go with PayPal as a business account or you choose to go with like a traditional bank like Capital One or Chase or whatever, for your business account, whatever you choose, keep them separate. Don't be like me.
And get yelled at by your
by your bookkeeper, CPA, and like whatever. Do not. Yeah.
All right.
This was fun. So if then I'll just wait a few more seconds and see if you have any more questions. But yeah, I think that. Let me know if this was helpful. Give us a thumbs up, guys. Give us a thumbs up. Share this video with somebody else. We really appreciate you being on here despite our domestic chaos. Our 6-year-old giving us a hard time. Yeah.
Thanks for all the questions.
And thanks, thank you so much, Carla. You rock too.
Carla.
You rock too. Which so let me know also like which other topics you would like me to do a video on.
You have a 6-year-old too?
Yeah. You said the 6-year-old is fine.
Okay. Yeah, thank you.
Okay. So he came to give us hugs now.
Yeah, there you go.
So yeah. Great. Thank you. All right. Well, you guys take care and we'll chat soon. All right. Bye-bye.